Good morning. Welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, May 30th, 2025. Ron Quaranta here with my amazing co-host, David Brill. Josh Clayman. David is flying across the country sharing wit and wisdom in the crypto space. We're hoping to have her back next week. Before we begin our usual disclaimers, thank you all for being here. If you've got comments or questions for David or I, please put them in the chat on LinkedIn Live or on X. As usual, please keep in mind nothing discussed is any kind of advice, and everything David and I are talking about, really our own personal opinions, don't necessarily reflect the opinions of our individual firms. David, we couldn't hold 110K on Bitcoin. What happened?
Well, we had Bitcoin 2025, so all of our biggest traders and evangelists were there and not buying. All joking aside, it seems that every year when we have this conference, the prices go down. Was disappointed that I could not be there this year. Love Vegas, but just had a few pressing commitments here on the East Coast, as well as having attended Consensus in Toronto. So only so much you can do at one time. What's your thoughts, Ron? Are you surprised, or did you sort of see that as a catalyst to get to all-time highs?
Yeah, I looked at it a couple of different ways, and I forgot what publication I read that really encapsulated the idea that post this conference, we kind of had to have a dip, which I guess sort of makes sense. A lot of the big traders are out there. And I feel like 110, not to get into the technicals of it, seemed to be a pretty weak support floor in my mind, David. You and I talk about this a lot. Had we hit 112, 115, I think that would have been a much stronger floor, just given some of the volumes I'd seen. But 110 just didn't feel, and I know that's a really weak word, like it would hold. And the puppy is angry with me for saying that.
My dog as well is not happy that 112 couldn't hold his all-time highs. She she wanted to go leverage long at 112, and thankfully she did not follow as well as a famous trader who was going long and unfortunately was liquidated.
Yep.
I do think that Ron, like the 105, 106 level is a lot of places where there's a lot of potential liquidations of longs at that level. Yep. So that's an area to look at as well. But I think as long as we stay above 105, 106 area, yep, we're okay at sort of getting a little staging a little base for another run upwards.
Yep. You know, David, it also brings us to a topic that you and I have spoken about, and I would love the audience's thoughts on this as well. I'm not being critical of the model, but a lot of firms are now adopting the MicroStrategy Saylor model of buy Bitcoin as the operating model of the business, including issuing equity and debt to substantiate these purchases. And now we're seeing a whole bunch of different companies. GameStop waded in. I think it was a $500 million purchase. David, correct me if I'm wrong. So part of me looks at that and says, well, this will be the impetus for higher prices. I get that. But the other part of me that I look at is like, are they increasingly issuing riskier and riskier things just to buy and stockpile BTC? And you see some interesting things, buying these really off-the-shelf OTC pink sheet kind of securities that are barely hanging on being listed. And suddenly they announce they're buying Bitcoin and they're worth, $6 billion or whatever the number was. I feel like I'm overly concerned about the model, David.
Look, I think in some of these were announced at Bitcoin 2025. Yeah. I'm a proponent of companies having more or holding some or having Bitcoin on their balance sheets. I'm a proponent of companies coming up with unique ways of raising capital to buy Bitcoin to hold on their balance sheet. I just do worry that they walk too far down the risk curve, and that if we do have a drawdown in price, which in every sort of Bitcoin cycle we do have some volatility. And in particular, like I think this year we get to 120 or 140, and then we have a sell-off. Do they get impacted in a way where they have to, forcibly liquidate some of those holdings? And then does that create some sort of cascade effect? So I'm not worried about strategy itself.
Right.
I'm just worried about not necessarily well-known people in the space trying to come up with their own system,
Hmm.
but really like the third and fifth and 12th copycatters
Yeah.
whose whole business model is, Bitcoin, holding Bitcoin and using financial gymnastics to fund it. That I do worried about, especially if we were to see, a significant sell-off.
Yeah, and David, look, at a fundamental level, for me, the concern is buying Bitcoin is not an organization that exists whose business model is just buying Bitcoin for the sake of buying Bitcoin versus a company like a payments processor or a large public company that's holding Bitcoin on balance sheet because they're accepting purchases or sales in crypto. Those are very different models. It'll be interesting to see where it goes, but the financial gymnastics start to get a bit concerning for me. So I'll keep an eye out. And let's dive into this deep into the pool a little bit, David. I haven't read the entirety of the interview, but proof of reserves came up during Mr. Saylor's conversation at the event, and he wasn't particularly supportive of proof of reserves. I get the perspective there, but that really was fodder for the anti-crypto people to say, "Well, look, you don't want reserves to be analyzed publicly." I don't think that's what he's going for. I don't think that's what he's trying to express. But what did you think out of that?
Well, look, I think there are a couple of things. One, when addresses have a large holdings, they become targets. So clearly, you don't want your addresses to be a target. Um, I don't know. Following his addresses, is that a way to like tip off the purchases he's making even quicker than him announcing them?
Hmm.
Not sure about that. I'm sure they have, a number of mechanical ways that they're purchasing the Bitcoin.
Yeah.
Look, they are a public company. They are audited. I do believe in real auditors and the work that they do for publicly listed companies. So I think what I would say is that I'm not concerned with strategy, not sharing addresses. I can see why some people would be.
Yep.
I'm kind of looking at it a traditional TradFi-ish looking view of how he's holding his Bitcoin, and we don't know if Apple has 100 billion in cash. We don't know what bank account they're holding it in,
Yeah.
but
Fair.
that bank account also isn't as easily targeted as a crypto account. So look, it's fair. I understand where people are coming from. I'm not particularly concerned by it. What
Yeah.
about you, Ron? Does that concern you?
It doesn't particularly concern me. The only thing that concerns me is the optics of how things like that are digested by the media.
Yeah.
I get, credit to Saylor. He has a thesis that he is committed to, and he executes on that thesis and has been doing it for some time. So it'll be interesting to see where that goes. For everyone in the audience, thank you so much for joining us, David. While we're talking about price action, while we're talking about the market dynamics, as I mentioned, price action, the sun just came out, by the way, which is interesting. David, I was looking at some price action over the past week, and everyone in the audience knows you and I and Josh text regularly, and it's usually, "Oh my God, why are the prices doing this?" I've been trying to analyze the negative correlation between crypto and the word tariff, David, and I am not able to find the correlation other than someone said tariff and the president tweeted something and things imploded. Why?
Well, look, I think again, it's all about instability and not knowing exactly what it will be, how it affects companies. And the Supreme Court on the district court level said that what President Trump was doing exceeded his authority. Then went up to the appeals court, who said, we're putting a pin in that for now as we review the arguments. So
Yeah.
I think there's a little lack of clarity there. I do think we'll benefit ultimately from, once the tariff policies are defined more clearly and we have agreements. I think some of that will go away. But look, it's not insignificant, the effect it has on companies, on prices.
Hmm.
And so I think that's why you're seeing this happen.
I, I'm with you. The reason I bring up this topic in particular, and for everyone watching, I do this to David all the time, this topic of why do tariffs make us react the way we do? And I get the macroeconomic impacts of that, or at least the forecasted impacts of that, David. But I guess part of my question is, are we too knee-jerk reactionary in the crypto space? Like we've had the conversation, you and I, about crypto moves faster. Crypto prices respond to economic stimuli faster. But is this almost a knee-jerk reaction to some of the news?
Well, I try to mute out most of the engine noise you hear because whenever I'm in New York, there's engine noise. Um, Look, I think as long as the tariff picture isn't settled
Yeah.
and inflation is perceived to be higher because importing costs of goods are higher, then the likelihood of rate cuts are lower, and that's sort of how I see the correlation.
Yeah.
That the
Yeah.
crypto community wants rate cuts, they want cheaper borrowing rates, they want lower rates, and these kind of things that prevent that from happening, have a negative impact on price.
Emma Channing, thank you for the comment. I don't see it directly either, but David, again, parenthetically, it weighs in on the risk on, risk off conversation. David, let's do it because we need to talk about some of the macro stuff as well. I haven't digested all of the data, but core PCE, personal consumption expenditures, what is the Fed's preferred measure of inflation? It actually came in below estimates. I think it was 2.5 is supposed to be 2.7. Inflation seems to be moderating. Consumers in the US, arguably, sentiment seems to be pretty better, getting better. Pretty better is a weird way to say it. You can almost ask, why are we not more risk on? And is it only the lack of clarity around tariffs? I mean, look, there's something to be said for the president calling the chair of the Federal Reserve into the White House. I wish I could have been a fly on that wall, but I don't anticipate rate cuts anytime soon, and a good chunk of the macro picture, including for crypto, relies on that.
I wouldn't have been surprised if President Trump held up a pair of scissors when he met with the Fed chair and said,
Cut.
Yeah, cut. Look, I think that unfortunately, our mainstream media is still tethered to this idea that inflation has to go up, that there isn't a willingness to sort of change the mind frame that, inflation is going down. Oil prices are down. I mean, housing prices, mortgages are up, but I don't know where housing prices are, but oil prices are down significantly. Much of our country uses oil for, gas or for heating. And so, we're also in the spring now, so you don't use it as much to heat your homes. So I think some of the real stickiest, costliest items are down.
Yeah.
I believe food prices are down. It seems that way at the grocery store. You don't really hear anybody talking about those expensive eggs anymore or anything like that. So it feels like, prices are lower, inflation is lower, and for whatever reason, that narrative is not being reported healthily right now.
Yeah, David, your personal chef hasn't really been complaining about the price of eggs for your special breakfast in the morning, correct?
Well, no, I eat a lot of protein bars, but the price of steak has remained constant.
For the audience, why is David bringing up the price of steak? I'm terrified again.
Yeah, I'm trying to figure out a way to win another one from you, Ron.
No more wages. No Josh today for the risk on bet. That is correct. Josh, I think, is on the West Coast, sharing knowledge and walking the red carpet someplace. David, go ahead.
But no, I'm not hearing anecdotally or reported that specific items are getting more expensive. And I think the one thing I will say is people are waiting to see what happens now that the tariffs are in effect. If companies are going to raise prices and pass those price increases on. Now, it's not clear to me, besides China, what other countries, have raised their prices and that we are paying those increased prices. And the last thing is, companies that have been smart were buying in advance, to prevent some of this from happening.
Yeah.
So I still think the story needs to be written, but food seems lower, oil seems lower. So, you have these positive things happening that's bringing inflation down.
And this, David, brings us back to something we've always spoken about, which is everything that the Fed is doing, arguably the data they look at is
Yes.
not forward-looking data in the aggregate. I'm sure there are
Yeah.
some forward indicators they look at, and all of the rear view mirror data that they look at is also generally revised, sometimes significantly. So again, my biggest concern in that ecosystem from a macro perspective, are we risk on, risk off, really becomes a matter of, does the Fed miss the boat on lowering rates again? And we need to really keep an eye on some of that.
You know,
David, go ahead.
as well, Ron, as you know, we also need to remember, like, we want to have lower rates for a couple of reasons. One is we have, in the last administration, they did not, refinance the debt on long-term paper. They did it on short-term paper. So we have a lot of debt that needs to be refinanced, and it's preferable to do with low interest rates. Also, the housing market, has these sticky 6.75%, 7% mortgage rates for 30 years, which is not easy, which kind of locks up the housing market with housing prices gone up. So,
Yeah.
look, this isn't just, oh, President Trump wants lower rates, you should do it. There are really meaningful reasons why the administration wants lower interest rates, and that it could benefit, the country as a whole.
Yeah, David, look, and shout out to Bloomberg. The other day they had a guest on, I forgot the name, but really spoke about the idea that first-time homebuyers can't afford 6.9 or 7% mortgages given the prices of some of these houses. So it'll be interesting to see where it goes, David. I want us to pivot a little bit because there's a lot to cover, and I know we've got to stop at around 12:30 or so. But you and I have been talking about something for years, and I wanted to get your perspective on this. And I remember, I'm going back in the day, folks. I want to say, David, 2018, maybe even slightly earlier, where you and I had a conversation saying that once the institutions get in, once the funds get in, the 401ks get in, the wirehouses, it's to the moon. And we've been seeing that peel away, right? There's arguments that the wirehouses are now getting involved, but not yet, later on in the year. I was pleasantly surprised when the U.S. Department of Labor rescinded their concern, or I don't think it was a prohibition, but basically the concerns about don't put crypto in 401ks, which had a nice little bump in the market. But those changes take time, right? And I guess the question becomes, how long?
Yeah. Well, look, I'll tell you, ever since working on the first Bitcoin ETF filing, I always believed, and I think the sponsors believed as well, that they envisioned that, and collectively, I think all of us envisioned that people would have the ability to put into the retirement account, and purchase Bitcoin. And I'm not saying people were going to go 100% allocated, but, people wanted to have, maybe 2, 4, 5% Bitcoin in their retirement accounts as part of their, structure, as part of their, their investment. And the fact that it's taken this long, one, to get the ETF approved, and now, thankfully, we have this letter from the Department of Labor. I do hope that some of the savvier players have been planning for this day, and can move this along so that people do have the opportunity to do it.
Yeah.
And look, you have to remember there are two different accounts. You have the typical managed accounts that the wirehouses or 401k advisors run for clients, and then you have self-directed. So look, it may very well be that wirehouses do not add any crypto into their managed accounts.
Yep.
But at least you and I and whomever else has, let's say they have, I don't know, obviously more than this, but let's just say they have $50,000 in a retirement account.
Sure.
And you want to put 5 or 10% in Bitcoin, they should be able to.
Yeah.
Like this whole concept of, there is a bit of paternalism when it comes to finance, and that, the individual doesn't know what's good for him or herself, and that,
Yeah.
it's only the wirehouse or the, financial institution that knows best.
Yeah.
But I've always been a believer that people should have choice.
David, I'm with you, and I think the real differentiator is the solicitation aspect of it.
Yeah.
Like if they're going to offer it but not solicit it, you're really not sharing information with your clients that arguably you should be sharing. And this brings us back to a conversation we had a long time ago when we had the meme coin, the meme stock rather, issues, and some of the largest wirehouses, they'd be on television saying, well, we don't think our clients should be buying this. Part of you and part of my mentality, and I think yours as well, is who are you to say that to clients?
Yeah.
And I get the risk profiles, but tell me, tell me you disagree.
Look, where banks or other financial institutions act as fiduciaries, as they do in 401k accounts, there's more conservatism. And look, for a large part of their client base, they really may believe this is not appropriate for them.
Yeah.
However, I would assume that people who have a longer time horizon, who are saving, who are interested in products that have real alpha,
Yep.
Those people would like some exposure. And again, 2 to 5% exposure of Bitcoin in your portfolio is not going to wreck or make your account, but it may add some juice to it.
Yeah.
But again, ultimately, you should have the choice.
Agreed. And look, David, these are ultimately the firms that offer, I'm talking in the abstract, right? But they'll offer options trading to a wide variety of customers. And for anyone out there who trades options and knows what I'm talking about, they're required to share OCC risk disclaimers and all of these other disclosures that, are in 2-point font, David, no one reads. But those clients who, will be able to trade options. So to me, there's a little bit of that hypocrisy there. And I don't want to beat a dead horse here, but I think you and I are of like mind.
Look, there are strategies that you could use. You could have a Bitcoin, covered call strategy.
Yep, right.
And it may not give you as much, it may not give you as high a return as owning Bitcoin, but it's a lot safer.
Yeah.
So there's a lot of different strategies. I think the more innovative banks will come up with different products and be more aggressive about making them, offering them to people. But I think at this point, a lot of people just want, whether the FA offers it or not.
Yeah.
Hey, you know what? I have X thousands, whatever, hundreds of thousands in my retirement account. I want a little exposure to this. So,
Yep.
Please offer this to me and don't make me run around somewhere else to get that exposure.
For everyone watching, this is not investment advice. I am not suggesting buy naked puts or calls on anything in the space. That can go south on you real quick. And people like Emma Channing, the private family office of Emma, she doesn't have to worry about any of this. They manage that for her.
But Ron, here's what I'm saying. And again,
Yeah.
We're not giving financial advice, but people want choice.
Yes.
People work hard. They put money aside, whether it be for savings, whether it be for retirement, and they want choice, and they should have choice.
Yeah, agreed. Emma, I'm totally kidding. I hope you don't mind the family office joke. David, I want to rip up the script a little bit. It's been a busy week, like all of the weeks have been. You may recall several of our working groups started working on commentary for the market structure draft. A lot of things are happening in DC. A lot of things are moving forward, and it was open for public discussion. It was just a discussion document. And we started collating all of the comments from members. And then yesterday, the House releases their actual proposed draft legislation on the market structure bill. The thing that struck me about this, David, and I'm not sure if you want to talk about it, was how much it emphasized the CFTC to fill the gap from a regulatory perspective versus the SEC. There's a lot of work to do there, but is that a good thing?
I think the prevailing view in during the last administration was that is a good thing.
Yeah.
I think, I really want to dive deep into it. I was fortunate to come across it yesterday and share it with our group right before a working group meeting. But I'm pleased that there seems to be more detail around some of the more substantive issues that needed to be addressed.
Mm-hmm.
And, I'm really going to, make some time. I think it's around 220 pages. And even though I read super fast,
you are a fast reader,
yeah,
fast.
Yeah, it's just something that I've been lucky with. But all that being said, it will take some time to go through that. But I think this is positive. I really appreciate that this administration is really focusing on this and making it a priority. And look, I think, again, we would like to see this in a bipartisan manner. I don't think the things that are in this revised draft are controversial on the level that one party should take issue with it over another. I think there are fundamental questions that need to be answered, and I'm looking forward to diving further into it and figuring those out.
David, I want to segue for the audience a little bit. I just want to point out that when you're in New York City and we mention regulators, we just hear alarms. For everyone in the audience, when I'm talking to David and he's at his Miami Beach compound, you just hear the gentle waves rolling from the ocean. David, I want to push back a little bit on that, and I think it's an important detail. When you look at what was put forward, I know you and I need to analyze it a bit.
Yeah.
There seemed to be a logic around the draft legislation that said anything that is in the digital asset space that is not a security is a commodity. And we've had a couple of members, shout out to Renato from Paul Hastings, who's a member, who really pointed out in our conversation that there's a bit of circular logic to that. If it's not a commodity, it's a security, but why is it a security? Which is a question fundamentally that no one wants to answer. And I think, David, part of it is the fear of we don't want to touch Howey.
Yeah, and look, I know Howey is precedent for a lot of securities law issues, and Reeves for notes and Howey for securities. I am still in the camp that I'm not sure that Howey has to be the end-all be-all for determining whether a crypto asset is a security. That being said, I don't think we have the amount of time in the legislature to sort of legislate around that, and so they use that as sort of as a jumping off point.
Yeah.
But look, we do need to have more clarity around things, and I do agree with Renato that there is sort of this circular logic. It's like if A, then it's B, but it doesn't always work.
But why is it B? Right.
Yeah, why is it B? And if not B, does that automatically make it A? Because maybe there's something in between.
Yep. David, I just want to pause for a second. Emma says, I have a terrible sense of humor. She's not necessarily wrong. I haven't hit her with the joke of the week. I will not do that on a live broadcast. Go ahead, David.
And I see we had another comment if you want to mention that too.
Yeah, Cassandra, thanks so much for joining. Why has there been an exodus from the CFTC? Really good question. I mean, there's been some items in the news without naming specific names, but one of the commissioners is now heading up, I believe, a blockchain association in DC, and kudos to them for that. I think one of the others resigned. I'm probably misremembering. It's a really good question. And I don't think at this point, David, we can blame Doge anymore for some of these, but I'd be interested if you have thoughts about it as well.
No, it's something I've been thinking about too. And I'm sure there are qualified people. I know a few probably who could be, and you do, who, could be a really qualified CFTC commissioner. Yep. So I think it's a good question. Why do we still have some, empty spots open? I think also I'm going to take this moment to say, be a little controversial, as Elon Musk, has said that he's moving back to the private sector, that I'm really appreciative of the fact that he shined a light on the fact that there is a need for reduced government spending. And I know that he's been a polarizing figure for some, and people are going to these crazy extremes of scratching Teslas and this and that. But ultimately, this was a private citizen who took his own time and really tried to help bring down some of the bloat in our government. And maybe the methods that he and his team use aren't the ones everybody would use. That's totally up for debate. I'm really thankful that somebody really smart and successful wanted to spend some time sharing ideas and trying to make a difference. So I'm appreciative of that.
I'm with you, David. I want to add one more wrinkle to Cassandra's really good question. I wonder how many people are leaving regulators in DC because things are quote unquote loosening up for the crypto space, and there's opportunity there.
Look, that's a good question. I mean, there's always been an issue that some portion of people who work in regulatory agencies want to get that experience and move into the private sector. I think maybe
it pays better.
Yes, it pays better. And I think this time we may be seeing more of that because the ideology has changed considerably in a lot of departments. And look, the prior SEC was very hostile to crypto. I mean, I don't think anybody can disagree with that notion. And I think that perhaps those people who had a negative ideology towards crypto feel this new administration does not share that. Yeah. And I think the challenge is that some of the cases that were brought against some of the crypto companies, really the legal arguments were very tenuous. And you saw some of the judges call them out on that. So I think that maybe it's not a bad thing that we're seeing some, some new blood in some of the agencies, and that we're seeing, look, I'm not the one who said this, but some crypto companies said they don't want to hire people from the previous administration's SEC.
David, there's something interesting about you saying the CFTC was openly hostile in the prior administration, and I feel like that's a relative statement because when you put that up against the SEC, that's an entirely different level of hostility.
Oh, no, Ron, I'm saying this, the SEC was openly hostile. No, I'm not saying the CFTC was openly hostile. I think.
Sorry if I misheard.
No, it's okay. I think they took more of a measured approach. I think what really was harmful is that the SEC became a place where it had a chilling effect.
Yeah.
People were circumspect about going to the SEC because they were concerned, hey, if we raise this issue, do we suddenly raise our head above, water and suddenly become a target? And as many of them did. So I think that's, that's the sort of paradigm that I'm referring to.
Yeah, David, good point.
But I do think it will be good to see, I think maybe that's a takeaway for next week, is to sort of see what's going on in the CFTC and why has there been an exodus.
Cassandra, you just gave us homework for the week. Thank you. Come back next week. Hopefully we'll have an answer. David, while we're talking about the regulators, there are a couple of things we do need to cover. One was the SEC's civil case against Binance was withdrawn. I haven't read through the specifics of it. There's the usual pushback. Commissioner Crenshaw in particular pushes back on a lot of what the current SEC commission is doing. David, when you saw that, was that expected in your mind?
Well, it's a great question, Ron, and we had discussed this internally. Again, I'm speaking only of my personal view and not of my firm. But a lot of us felt that after Binance settled for over $4 billion, that the SEC should have been part of that settlement. Okay. All the other regulators were, and they stayed outside of that settlement. And a lot of us thought that it should have been one global settlement. And so typically in those kind of arrangements, the regulators share on some prorated basis the fines that are paid by the company, and it goes to fund the agencies. I think Chair Gensler made a mistake by not joining the rest of the agencies and settling the case. And a lot of us didn't like the precedent of maybe trying to get a second bite and using extra claims, but ultimately, it seems like this SEC did not think those claims were sufficient or viable, and the complaint was dismissed with prejudice.
And David, I'm sorry, go ahead.
My long-winded answer is saying that the commission really should have settled when all the other agencies settled. And, I don't know, they may have lost out on some of the fines from the Binance settlement, but I do think this is positive for Binance and positive for the, for the centralized exchanges in our space. And hopefully, we're on the precipice of turning the page.
David, I want to be clear for the audience as well. I had several colleagues who were not focused on regulation, certainly not focused on SEC settlements. This is distinct and entirely different from the Department of Justice antitrust case against CZ, which was fully adjudicated as well. And I'm a little worried that I brought Department of Justice up, David, and the alarms came on again in New York City. But again, a very distinct case. Yeah.
So the Department of Justice case against CZ and Binance was related to OFAC violations and money and anti-money laundering violations. Yeah. However, typically you'll see if, these large scale settlements that the other agencies they do it cooperatively and they, have a global settlement. So this was an opportunity, I think the commission missed to take that. Yeah. And again, ultimately their claims were dismissed with prejudice, so that clearly there wasn't strong legal basis for these other claims that they were making.
Yeah, David, I thank you for the commentary on that. We're going to wrap it up with one last comment. Again, everyone in the audience, thank you so much for joining us. If you do have additional questions for David or I, info@wsba.co. David, I know you're a fast reader and you're one of the sharpest minds I've ever known in the crypto space, which is saying something. But yesterday, I believe it was, Commissioner Peirce put out commentary that staking, coming out of the SEC, that staking is not a security or is not related to securities transactions. I have not yet read the commentary. I don't know if you have, but to me, this is groundbreaking. I wanted to get some of your perspectives on it.
So I have not. Candidly, I did have the Knicks game on last night as I was doing some work, because unfortunately, once basketball finishes, it's a barren summer with only baseball until the U.S. Open and football starts. But I haven't, but I thought about it. And one thing it really signals to me is that this should open the lane for staked ETFs,
Yep.
staked Ether
Bingo.
ETFs, which people want, and which I think is one of the reasons why Ether has not performed as well on a percentage basis as Bitcoin, is because people want that return. And I think a product that can provide a 3 to 5% return on top of the underlying, will be a very attractive product to people who want to have exposure to crypto and also get some, I don't know if I can call it fixed income, but who want to get income,
some yield,
want to get yield from it. So I think this is really taking the shackles off Ethereum and the Ethereum ETF products in the marketplace.
David, Ethereum's still down over 24% or 23% year to date, but it's holding its own above 2,500. So if we look at staking eligible for ETFs, and we look at some of the other ETFs in the marketplace, do you see, again, we're not doing any predictions, but do you see Ethereum moving back up to some of its all-time highs?
So in this scenario where we see broadly crypto move up, if we see Bitcoin break through a new high, get to 120, I certainly could see Ethereum. I had some notes here, like there's a fair amount of supply and resistance at around 2820. Yeah. So I do think if we could get past that range, I think we could get back up to 3,400.
Interesting.
I don't think that Ethereum is going to move with the velocity of Bitcoin on a percentage basis. But do remember, it was languishing around 1,1700, and it had this big move up to 2,400. So
is that where the options are sitting at the 2,800 range?
I don't think they're sitting there. I just think there's a lot of sell pressure that would occur there. But I do think that there's still a lot of people who are shorting ETH, and the idea. Another thing to keep in mind is that if you had an Ethereum ETF and that provided some yield and people were shorting it, those prices would be a little more expensive to short it.
Right.
That's just another element to think about.
Yep.
Adam Goldberg made a comment, at least 2 more days left. I'm not sure.
I don't remember, and I've only had 2 cups of coffee today. So Adam, remind me what the 2 more days left are about.
Yes, please do. And again, it's always good to see you, Adam.
Absolutely. Adam, welcome. Yeah. David, I keep saying we're going to wrap it up, but the news just keeps coming. I wanted to add one more thing, and we're going to go off script a little bit. We don't get a chance to talk about this enough, but the real world asset blockchain use case. And I don't know if you saw the news. Bergen County, New Jersey will be leveraging the Avalanche blockchain to register deeds for property on the blockchain, which is, by the way, a blockchain use case you and I and almost every member of the WSBA has been talking about since 2014, 2015. Real estate's a tough business, David, but is this the beginning of that real world assets define the use cases for blockchains and tokens like AVAX, for example?
Well, look, I think this is a great idea. I think provenance of real estate, what are you paying title insurance for? You're paying it because you can't prove, and you want insurance that the title that you're buying is clean. If we could have a system, the Knicks game,
The Knicks.
I blocked it out, Adam, because I think they're going to lose in Game 6 Indiana, for better or for worse.
I had a different take. When I saw 2 more days left, I thought, is there a response to some SEC thing that we need to do? And I totally forgot about it. But Adam, thank you. Good, David, go ahead.
So I think provenance is key. And so if there is a way using the blockchain to really settle the issue of title and that, make it cleaner, and that, people may not need title insurance anymore and they can rely on the blockchain to show, provenance of title, I think that's a really positive thing.
Yep.
I think that the blockchain and real world assets. I think in terms of, certain legacy systems that have been really like inadequate or still sort of, paper and sort of people writing and signing things. I think an efficient system being, implemented will be really helpful. And look, there's a whole host of great use cases
Yeah.
and one last thing, I know I'm running on a little bit, Ron. It doesn't always have to be financial instruments. It
Right.
can just be things that people use in their daily life interacting with their governments that, can be improved by the blockchain.
Yep. David, I agree with you. We're going to end up leaving it there. I will end off with one quick anecdote. I do not live in Bergen County, David, as you know. I live in a different unnamed county in New Jersey, and they are perfectly happy with, I joked about this the other day with you, quill pens and ink and paper. So I'm hoping they join the 21st century in blockchain soon. David, thank you so much, buddy. Always good to see you. Emma, Cassandra, Adam, thank you so much for watching. Again, if you've got additional questions for us, info@wsba.co. I think the Learjet brings Josh back later this weekend, David. So she'll be back with us next week. We'll leave it there. Thank you, everyone, for joining us. Have a great rest of the day. Have a great weekend, everyone.
Take care.
Bye-bye.